What's going on, everybody? Welcome on into today's video. Hope you're doing well. We are covering a full Webull candlestick tutorial. So we're going to be covering all the different options that you have when it comes to looking at your charts, and then like what they mean and how you can actually use them, some uses for them, what I like to use, why I like to use that. And so let's just jump right in. So right now we're looking at a chart. Now, of course, if you guys get any value out of these videos, share it with a friend, make sure you subscribe, thumbs up button. I appreciate all of you guys who do that. We're looking at Google. So right now we have Google's chart, and I'm looking at the weekly chart. So each of these candlesticks is 1 week. Now, I want to make this pretty clear because everyone always has this question. Everyone's always going to be like, well, does it matter on what time frame? No, it doesn't matter. I mean, realistically, these candlesticks can be utilized across any time frame that you want. Okay, if you're going to be an investor or you're going to be more of a swing trader, you want to look at like the daily chart, the weekly chart, the monthly chart. Big picture. If you're a day trader, you're obviously going to be looking at the short-term time frames, the 1 minute chart, the 5 minute chart, maybe even the 15, the 30 minute chart. So it doesn't really matter. All it matters is that you have a system or you have a setup that you like to look for, and then you can utilize these candlesticks to help you and guide you through that swing trade, that investment, that setup, whatever it is that you're looking for. Okay. Now, when you look at a chart like this, primarily most people are going to be familiar with a chart that looks like this, okay? Go to CNBC, go to like Yahoo Finance, wherever you're going to go just for the masses, right? Here's the chart. You can just get a good sense of the trend, where the stock's been, all that stuff. This right here isn't a candlestick chart. This is a line chart, okay? So I'll cover this one briefly, then we'll dive deeper into the candlesticks because that's where we can actually pull a lot more information out. And really, when it comes to candlesticks, you're going to be able to pull a ton more information out of a chart than just where the stock is trading right now, okay? And that's what's really important about it, because that tells you a bigger story, and that gives you a much better picture for where the stock may end up going forward. So as I hover my mouse over the chart right here, up in the top left, I'll circle that here on the screen. That's where it's going to give you all the information. So it tells you the open, the high, the low, the close, the volume. Okay, that's essentially what it's going to do. And then it tells me where the moving averages are that I currently have on my chart, the 50 MA, the MA 50, and the MA 200. It gives me the exact, number to the cent where those are. Okay, so you kind of have to look at this chart, and then you have to kind of hover over it to actually pull more info out of that individual spot, right? But that's a line chart. Then there's this chart right here, an area chart. So you can kind of zoom yourselves out, and they essentially fill in underneath where the stock is trading. Pretty similar to a line chart. Okay, you're going to be able to derive the exact same information off the area chart. Now, here's where it gets fun. Candle chart. Okay, here's a candlestick chart. This one is really interesting because a candlestick chart starts to give us more information. You have greens and reds. Now, a candlestick chart, not a hollow candle, nothing else, just a candlestick chart, okay? That's what we're looking at. And what this tells me, okay, is these don't tell me if the stock was green or red that day. It's a common misconception. We'll get there on the hollow candles. But a candlestick chart was going to tell me from the open to the close of that candlestick, was the stock up or down? That's going to tell you green or red. So if I zoom in here on Google, right, I'm going to adjust this to the auto so we can kind of see it a little bit better. This, where it hit that 152.10 area right here, this tells me that it actually opened up at the bottom of the body of the candle. Now, there's the bodies, which are the filled in parts, and there's the wicks, those little lines in the top and bottom. The wicks just tell you the range, and that's going to be the same thing for hollow candles as well. The wicks tell me, okay, the stock traded down to the low of the day at the low wick, and the high of the day was the top of the wick, the high wick, right? That was the high of the day. Now, the body, the colored part, tells me the range from where it was open to close. So on a green candle, the stock was up from open to close, okay? So the stock on that day opened up here at like 134, and it closed up here at around 143, but it also had range up to 152 and then down to the bottom of the wick, which was down here to 132. So that gives me the whole picture, right? So you can kind of see that it hit up to this level, got rejected, closed here, opened here, and then you can move over to the next candle. Next candle right here is red. What does red mean? It opened at the top of the solid body and it closed at the bottom of the solid body. In this case, there wasn't too much of a wick, so there wasn't too much more range from open to close of this candle on that given week. So we opened up around 143.73, and then we closed the week down here around 134. That's what it tells me, okay? That right there is what you need to know when it comes to candle charts. Now, the reason why it's useful is because you can start to see things like potentially volume exhaustion. You can kind of see when things start to top out. And so when you have a massive wick to the upside and the stock you see that didn't actually close anywhere near that, it tells you that there's actually not that much strength. And that move wasn't very, very strong. And when you have a close towards the top of a candle or the bottom of a candle of that given day range, right, closing at the low of the day, for example, let me kind of highlight this right here. Look at this time span right here. There was multiple closes down towards the low of the day, a low of the candle, and that was really showing that negative momentum, right? When we have a lot of closes towards the lows, it just tells you sellers are in control. So that's why it's useful to look at candlesticks and not just a chart saying, oh, where the stock is trading. You can generally get good trends off that, but it's not as useful, okay? Now, if I jump over to hollow candles, and by the way, it's going to be up in the top left of your chart. You're going to go to line style on Webull, on the charting platform or on the charting widget, okay? Now the next one is hollow candles, okay? Here's where it's different. Hollow candles, if you go back and forth, check a chart, go pick up a chart, whatever you want to do. And if you haven't signed up for Webull yet, there'll be a link in the pinned comment and video description box to sign up for Webull if you want to. But go back and forth and check in on your chart and switch between regular candlesticks and then hollow candlesticks and see if any of the candles change colors, right? They're going to obviously, some will be hollow, some will be, solid. But if they change colors, it tells you something different, because hollow candles are going to be based off the prior day's candle close, the prior candle's close, okay? So if the candlestick is green, okay, it doesn't matter if it's hollow or if it's solid. If it's green, okay, in this case, there's actually no solid greens. There's actually only a few solid greens. I'll zoom back out to show you an example of that in a second. Hollow or solid green, what does that mean? The stock was up. It closed higher on that candle than the previous. If the candlestick is red, hollow red, or solid red, the stock closed lower on that candle than the prior candle. And again, doesn't matter the time frame, 1 minute chart, 1 week chart, same deal, okay? In this case, you're going to see a lot more hollow greens and a lot more solid reds. For the most part, that's kind of the deal, right? Solid means you were down from open to close. Hollow means you were up from open to close. And if the stock was green on that day, it's a good chance it was up from open to close. The stock was red on that day, good chance it was down from open to close. But there are some select situations where stocks gap up or gap down overnight, right? We're mostly on the 1 year, 1 day chart, the weekly charts, things like that, where we have these gap up, these moves overnight, and that's not reflected in some of these candles. And so that's where you can kind of see the solid, greens and the hollow reds, right? Where you could still technically on a green day be up on that day compared to the prior day, but from the open to the close, you actually traded down. So that's kind of the deal. That's all you need to know. I'll go to a daily chart, a 1 year, 1 day. We can kind of see it potentially a little bit better. Let's see if I can find some. Yeah, we got a little more action here. So we can kind of see on this, in this time span, you have some solid greens, you have some hollow reds, and so that kind of covers it a little better. I would say that the daily chart is kind of best for this in this situation. So you're not going to see this happen too much on very short time frames, because you kind of have coverage across the entire time frame. But on the daily chart, a lot could happen overnight, and it could be useful to utilize these candlesticks, which is what I like to use. Okay, so we have a hollow green. I'm going to kind of cover this guy right here. Hollow green. What happens here? We open at the bottom, close at the top of the body. Even though it's hollow, same deal. The wicks, same thing. The wicks are going to tell you the exact same thing. It just tells you the range. So we had a range down to the low of the wick, the bottom of the wick on that candle, and then range up to the top of the wick, wherever that candle is. Same thing for reds. But let's cover hollow first. A hollow candle, again, is up from open to close. Doesn't matter if it's red or green. So in this case, this nice big green one right here opens up at looks like 118, trades down on that day to 116, and then closes here at 122. Okay? This hollow red opens up down here, so it gapped down from the prior day, opened up down here at like 112, and then closed at around 113, even though it had range higher and lower. Okay? Hollow means it was up from open to close. So a hollow candle would actually be green. If we jump back and show you the candlestick chart here. So look at this candle right here, this hollow red on the 12th of May, 2022. If I jump back to a candlestick chart, boom, it would technically be green on a regular candlestick chart, okay? That's what you need to understand. A hollow candle, no matter red or green, would be a green candle on a regular candlestick chart because it would be up from open to close of that candle. Okay, now if we look at the solids would be essentially red. So if we look at a solid green, let's look at this candle right here. This is a solid green, tells me we open at the top of the body of the solid candle, closed at the bottom of the body of the solid candle, and the wicks were just the range, the high and the low. Okay, so this is the 10th of May, 2 days prior to the other candle we just looked at, the 10th of May right here. If I jump back to a regular candlestick chart, boom, it's red. Because why? It was down from open to close of that day. That right there, my friends, is a hollow candle chart in a nutshell. And that's what you need to know when it comes down to a hollow candle chart. Now, there are some other charts here. There is a baseline chart, which we can kind of zoom ourselves out right here on this guy. It's kind of similar, to be honest, to the area chart we just looked at before. This chart will just show you if the stock is above or below the average price for the time frame that you're setting. I don't really use it too much, but it could be useful to kind of show you, okay, well, this stock is, substantially below the average of this time frame. Maybe it's a better buy. Maybe it's worth looking at on the buy side for a potential return to the mean, return to average. That's kind of what people tend to use it for. I don't use it too much because we do know that doesn't necessarily matter. You can have, macro environments that drive stocks lower in times where it even seems like, oh, they're low, but they could still go lower. And when they're high, they could still go higher. So I don't like to use it that much, but it could be useful. Then there's the bar charts. I don't want to cover these too deep because, to be honest, most people are not going to use these days. Most people just use candlesticks, but you might find a bar chart useful. And it's not really technically a candlestick. I guess it kind of is, but it's not like a true candlestick chart that we like to look at. But here's the thing. If we look at a bar chart, let me zoom in because it's going to be tougher to see because these are just regular bars. There's also colored bars. They can just color it in, which is helpful. They're essentially the same thing. One's just colored and one's not. The colored, obviously, if you can see that easier, it's great. The non-colored bar chart just makes it like a little bit simpler, I guess. And if you don't want to look at charts and you don't want to look at colors and get all kind of confused, or you don't want to get swayed because, oh, it's green or red, right? You just want to look at straight up, what's the price action? Tell me the price action. I don't care. Could be useful. So if I zoom ourselves in, let me zoom this in a little bit better. Here's a bar chart. Essentially, what you need to know is the open is always going to come in from the left and connect to the line, the straight up line, and the close is going to be out to the right. So open comes in at the left, and the close is out to the right. And then the range was essentially the same thing as the wick we just looked at on the candlesticks. The range is that vertical line, okay? So the bottom of that line was low of the day, top of the line, high of the day. And you can essentially derive these exact same stuff from this. So open, close, okay, the stock actually moved up that day. It opened here, closed here, it moved higher. Okay, this day it actually gapped down from the prior close and then pushed higher that day. So that's what you can kind of derive from a bar chart. Colored bar will just color it in and tell you, okay, well, was the stock, up or down, relatively speaking on that day. It's not going to tell you, like the green versus red just tells you up from that day. So if we look at this example right here, we had this red open and then close. Okay, so it opened higher than it closed for a red bar. The next day it opens lower and closes lower, right, than the prior day. But because it closed slightly higher than what we just had the prior day, this bar is green. So the bar chart tells you green if the stock was up from open to close of that candlestick, and then red if it was down from open to close of that candlestick. And that's pretty much what you need to know from a bar chart. Not many people, I don't really see many people use this. I guess there are some old school traders who still use it, but I don't see too many people using it these days. And to be honest, I just like the candlesticks better. So that's what I like to do. Okay. Last but not least is Heikin-Ashi. Okay, here's Heikin-Ashi. Now, there's actually a calculation, more of a formula to this, but essentially what you need to understand is that essentially it means average bar in Japanese, I believe. So this is more of an average. And so it's going to take into account the average of that trading candle and give you more of a feel for the range and for the direction and the momentum, which is what's really helpful for Heikin-Ashi. So if I zoom ourselves out on this Heikin-Ashi chart, right, what we're going to see is that there tends to be more consistency in the greens and reds. There's less chop, whereas if I change it back to a hollow candle chart, there's greens, there's reds, there's ups, there's downs. The Heikin-Ashi is kind of able to blend some of those lines and then show you, okay, do we have momentum upside or downside? And what it tells me right now is that we actually have momentum to the downside, right? And in the past, we had this big time move down. So this is useful to get a feel for the average and for a momentum trader. So if you're looking to take advantage of momentum of a stock, this could be useful. So once you have a flip from green to red or from red to green, and that starts to tell you, hey, the tide's turning here, the stock might be ready to reverse. Now, obviously, there's fake outs, and we had a fake out. If we kind of take a peek right here, there was a little bit of a fake out back in here, right? You're going to have those, but that's essentially Heikin-Ashis in a nutshell. Heikin-Ashis I like to use for is if I'm momentum trading, and what I like to look for is that flip from one color to the next, and then that consistent move, and then that beginning of the next move up, and then you can play the range of that. Now, I don't like to use these too much, but when I do use them, the way I'll use them is in a very short-term momentum-based trade. So you'll find that sometimes when you have trending stocks throughout a day, you can ride these up until the Heikin-Ashi turn. So one example here for this stock for Google was if you go back into this time frame, we had the move down, we had the doji right here, which, by the way, a doji is where a stock or a candlestick has a big wick up, a big wick down, and the body happens to be like right in the middle, okay? So it's like indecision. It's telling you buyers, sellers are fighting here. It's indecision. But if that comes right after a really big trend to the down or upside, that could signal a trend reversal. That's what I like to use it for. And so in this case, what I was able to see is for this Google bounce, Google came down to 102. We had this doji right here at 107. The next day was a nice green candle. You could have taken advantage of this guy in this trend from, let's say, like 110 up to about 115, which would have been a $5 gain. Nothing crazy, right? But in an option play, it could have been nice depending upon the time frame. And then eventually you had the next doji right here. If we take a peek at this, here is your next doji, and then you have the move back to the red. So that's where the use case can come in. But essentially, they're calculating the average. They're getting a better feel for the average price action. And so while you could have crazy outlier days up, down, left, right, essentially, right? Craziness can kind of go on in the stock, right? This is going to kind of filter out some of that noise and say, okay, what's happening? Is the trend still up here? Is the trend still down here? Here's the average, and here's the chart for that. And it's kind of helpful to kind of cut out some of the noise that you're going to get intraday or intra-range that you're seeing on a stock. So there you guys have it. That was Webull candlestick charts in a nutshell. If you have any questions, leave them down below in the video comments section. Like always, any other links and resources we'll leave down below as well. Webull, there's a couple free stocks you can check out down below. There's a webinar covering 3 trading signals to add to your arsenal as well if you would like to. And again, I'll see you guys in a future video with the thumbs up button. Consider subscribing and share it with a friend if you got something out of it. Peace.